Okay, good morning, everyone. On behalf of the Real Estate Board of Greater Vancouver, I'd like to thank you for joining us today for our virtual event, Reverse Mortgages, What Realtors Need to Know. You're going to learn a lot today, so don't worry about memorizing anything. We'll send you a recording of this presentation in the next couple of days. Now on to our presentation. I'd like to introduce you to our speaker, Angela. Angela is an 18-year award-winning woman of influence. Alongside her team, Angela passionately assists mortgage holders in acquiring the best possible mortgage. Today, she is here to discuss reverse mortgages with us. So please welcome Angela.
Thank you so much for having me here today. And thank you for all of you who are invested in learning how to provide the best solutions for your clients that you serve. I know some of you here at the Real Estate Board have the dealing with seniors designation. So this will be particularly helpful as we navigate through this. Again, thank you, Denishka, for the wonderful introduction. Also, you may recognize my voice from CKNW every Saturday at 7 o'clock. And we have written a book on the mortgage matters that impact Canadians here today as well. So first and foremost, what is a reverse mortgage? A reverse mortgage is a mortgage product that allows you to access on average 55% of the equity in your home with no payments. This is a non-taxable event, which means there's no cash flow impact on day-to-day living. If there's anything that you take away from this webinar today, let it be an understanding exactly of what a reverse mortgage is and who it's suitable for. So these points are key, and you'll see how they can weave through proper financial and multi-generational planning as we go through. Just a little update that we did recently on global news regarding reverse mortgages.
The COVID-19 pandemic is causing financial hardships for many people. Seniors and retirees have been especially hard hit by the economic downturn. While the federal government announced earlier this week a one-time payment for eligible seniors, there are other options. Here to discuss reverse mortgages is our mortgage expert, Angela Calla. First of all, Angela, what is a reverse mortgage?
A reverse mortgage is for anyone over 55 that is looking for a way to unlock the equity in their home without having to make monthly payments that will allow them to preserve and build their wealth. This allows them to take advantage of keeping their investments in if their investments have taken a hit during COVID-19, and allows them to still access all the government benefits and not having any tax burden as a result. So this is really helpful for anybody who wants to access their equity and not have to stress test or make any payments on a mortgage.
So how about the risks of something like this? Could you possibly end up owing more than your house is worth?
Absolutely not. Reverse mortgages have come so far over the years, and over the last 30 years, there was only one player in the market. Now we've seen two other lenders come into play. So all this competition has done great things for consumers, and you can customize these mortgages. There's even a lender out there that will give you a guarantee that regardless of what happens, you will not owe more than what it is. Another important thing to know is it only goes up to 50% of your property's value because there are no payments and there is no qualification as a result. This actually protects people's wealth because so many seniors have outside debt. They're using credit cards and lines of credit to fund what they need in their life. And so the people who are taking advantage of it are people who don't want to have outside debt. They don't want to have payments, and it actually offers spousal protection because no payments are due until the last person on the title passes away. So it protects the spouse from never having to requalify for a mortgage or go through the stress. So spousal protection is a significant part of the reverse mortgage component.
What else do people need to know about reverse mortgages?
That there's options out there, and this is a much better option than accumulating outside debt. Oftentimes we see people over 55 suffering and they're spending money on credit cards and lines of credit, or they're getting private mortgages at a high rate. Unfortunately, seniors have been subject to predatory lending in the past. So this is a way that they can ensure when they go to an accredited mortgage professional that all the options that are out there are available to them, and they're not going to get into something which is going to deplete their wealth. And I think the most important thing that people need to know is reverse mortgages are a tool to build and preserve your wealth. So with all the options that are out there, it's certainly something that should be considered if you would like to do a renovation, help your loved ones with a home purchase, or you're looking to go closer and combine forces, or you need money for healthcare or living. There's options out there, and you can be rest assured that understanding them will give you the clarity you need.
Thank you very much for all that information, Angela. It's a great idea to look at all of your options.
Indeed, yes, without bias.
So you can see there's a lot to unpack there that we just went over in a few minutes. So the education is key in understanding exactly how to do this. Now we will go through the various ways that it will assist with real estate purchases and wealth accumulation through building a real estate portfolio. But as we go through this, it is important to know that while we did talk a lot about debt consolidation in here, it's often debt that's holding seniors back from being able to make other purchases to build their real estate portfolio. So this is one of the ways that we can kind of reverse the clock in order to get their equity working for them. And this is not an option that they'll be offered at their everyday bank where they go to do banking, and not certain mortgage professionals are more accustomed to working with these than others, and they have the appropriate designations. So that's important to understand as well. So the only other option is if the consumer went directly and called an 800 number based on one of the ads. But then, of course, the solutions that are available might not be as financially planning and systematic when you're looking at everything in its totality in terms of options. So it is very important to know that seniors, when they are looking to help gift money to their children, they sadly sometimes don't know about this option. And so they end up eating up the equity in their home that they could have utilized to build their real estate portfolio. So while we're on this call, I think it's really critical to understand some of the statistics with one of the rising demographics that we have here in the province. So according to Stats Can, seniors are the fastest growing segment of our population. Incredible, right? Approximately 1,000 Canadians turn 65 every single day. And it's predicted that in 10 years, almost a quarter of the population will be seniors. The statistic that really blew me away is that 5,500 Canadians are retiring every week, and being educated assists in preparation in the coming years, and also for you while you're preparing people to sell their homes and multi-generationally help them build their real estate portfolios, as well as assist their children getting into the market, because children are getting into the market by the way of getting large gifts from their family members in excess of $100,000 to $200,000 and $300,000. So reverse mortgage lenders options is, you may be familiar with older terms and policies that the first company had market share previous for 33 years now. There's now about a half a dozen lenders that are growing to serve this demographic. And so the more products that come available, the more options that become available, it's good for Canadians because it brings the cost down and it makes the terms more favorable. So we've been very happy to see the entrance of lenders customizing products for this very rapidly changing demographic that we see here in the province. And in terms of reverse mortgage types, there are two types of reverse mortgages that reverse mortgage lenders offer. There's a standard reverse mortgage, which is paid in a lump sum initial advance. And there's the second type of reverse mortgage product that is a scheduled monthly advance. And lastly, of course, you can combine the two and have a mortgage that is distributed to you in a lump sum as well as monthly advance. As an example, we had somebody who contacted us last week, Beatrice in Abbotsford. She lived in a 55 plus building. She had a traditional major 5 bank mortgage on her property, but there was an assessment coming up on the property. And she couldn't get, obviously, the bank to increase the mortgage for the assessment. She had property tax deferrals, and also she wanted to help her children get into the market. The problem was, of course, stress test. She couldn't qualify for a mortgage. The property itself had its limitations. And in addition to that, she wasn't bringing in enough money from a cash flow perspective to be able to assist her. So she was able to get a reverse mortgage, completely turn the tables on her financial future. And she was able to pay out the bank mortgage, have money for the lump sum, give her children a down payment, as well as give herself a small scheduled monthly advance. So she wouldn't have to draw from her investments that were not doing as great as intended at the time. So she was able to accomplish all those things without having a taxable event, and preserving her home and helping her family build their real estate portfolio as well. And with rising interest rates here as well, it makes it more difficult to qualify for a mortgage. So that was certainly a welcome assistance. And it's no surprise that with the rate of inflation, that 7 out of 10 Canadians 55 or older don't feel that they're ready for retirement due to not having enough cash flow. And since they're one of the things about utilizing the reverse mortgage from a family planning perspective is, since there was a debt on the home, it will reduce the tax owing on the estate. So one of the things that people want to have clarity on as well is that it is a lifelong commitment to the home. Most people want to remain in their home. They just don't know what financial options they have. And the propensity to move drops dramatically as people get older. And I don't know, it was hard enough for me to wrap my head around moving in my 30s. So I couldn't imagine if I was in my 70s or 80s and wanted to move along in it. So with the reverse mortgage, that's certainly something that they don't have to worry about, but they can still generate income for themselves and take away the scarcity of not being able to move by utilizing the equity in their home to buy a downsized home should they find something suited, or in the event they wanted to help a child as well. So the way to identify this when you're interviewing your clients to see how you can help them achieve their real estate goals is to determine if it's a want or a need. And if you hear these points coming up in conversation, then, you know, being up to date on the newest mortgage products that are available, you'll be able to kind of suggest that they review this as one of the options that they consider as they empower themselves to make the best decision for their family and overall financial health. Is it's either a want or a need. And a want is something that seniors want to get a reverse mortgage to fund something that they want. It's a feel-good scenario. So oftentimes they want to give an early inheritance gift, because $1 that they can give today is only going to potentially be worth 80 cents 20 or 30 years down the road. Look at the price of real estate today versus 20 and 30 years ago. If they can give them the inheritance today, it's better from a financial planning perspective, and it doesn't impact their cash flow. So it's very impactful when they learn how to get their money working for them. And also maintaining or improving their lifestyle in retirement. Things like golf can get expensive, and travel. And, you know, while they may think that they have to sell their home because they have no other option, they can probably build their portfolio instead of having that move away, because the only two ways to access the equity in your home is to either refinance and take money out, and make a payment to do so. Now with the reverse mortgage, they have the option not to do so, and both of them are non-taxable events. And obviously the want is, a lot of people are understanding that the reverse mortgage can grow your property portfolio and increase your overall wealth, because it can help you make home renovations. It can help you purchase a vacation property. It can help you purchase a rental property, and it can also help you help your children navigate divorce and help you with that aspect as well. But one of the things that we found to be most helpful is we talked a little bit earlier about some of the age restricted buildings and property assessments coming due on some of these buildings where people don't have the cash to be able to pay for it and find themselves in financial stress, and also not wanting to sell the property at that time because in doing so they may get a lower sale price than if they had waited for the work to be completed and then sell their home, if that still was their goal. And one of the things that impacts options in terms of financing is obviously the zoning of the property, the age restrictions, the access. And we noticed that reverse mortgages went up in utilization to help purchase vacation properties. And so here's a little something again that we did on that will help that as well. We did a blog post on it here, but we just did the
Restrictions on travel mean that now more than ever, British Columbians are exploring this province. If seeing what is in our own backyard has you thinking about making a vacation location permanent, here's what you need to know about financing secondary properties.
It's very essential to be pre-approved. I mean, it's huge for many reasons, but with all the factors and calculations that go into purchasing a home, the down payment, the income, the credit score, the closing costs, the personal profile of the borrower, shopping without a pre-approval to understand those specific factors will lead to disappointment.
Your pre-approval amount will depend on the same things as your primary residence mortgage, like job and other debt.
Most Canadians have car loans, lines of credit, and credit cards. And with every $480 a month payment outside of their mortgage, that takes away $100,000 in mortgage qualification. With the recent worldwide pandemic, some people have had interruptions to their employment. And with interruptions to employment, that will change the mortgage qualification process. Every lender that's available to Canadians through an independent mortgage professional has different lending criteria. And if there's been an interruption, that might stop the period in which the lender can look back and feel comfortable using an average of that income.
When you are looking at properties, where and what you are buying matters to the bank.
Well, lenders consider traditional property residentially zoned, highly marketable, sellable within 30 days, and everything fits kind of within a certain box. Now, when we're looking at some properties that have leased land, different zoning, water or sewer that's not municipal, not year-round access, different electrical, handyman special, co-op, commercially zoned, manufactured, those are all not what the lenders consider to be traditional marketable properties. Generally, what you're doing is you're actually looking at what equity you have in your principal residence and using that equity to purchase that property either out in its entirety or putting a significant down payment on.
These 4 factors can make or break vacation property dreams. Caitlin Herbst, Open House.
So you could see, oops, okay, now I can't find the, here we are. So with that as well, you heard that the income qualification is not a factor for reverse mortgage like it is for traditional mortgages. So when you're talking to your clients about their real estate goals, are they looking at purchasing a vacation property, but are concerned because they don't have the cash to do so, the income to do so, or they don't want to cash out their real estate portfolio to do so, or they're self-employed and they hold their money in their corporation and they don't want to pull that out and pay the tax rate on that, or necessarily buy it in their company if they are doing it personally. So utilizing a reverse mortgage for somebody who's looking at buying a vacation property, also because essentially they're buying the vacation property for cash, allows them to move quickly when those markets are also moving. So that is very important to consider. Also, some of the vacation properties that people like to look at purchasing might allow nightly rentals and different zoning aspects that we discussed in that segment as well. And with that in mind, you want to very well have an understanding that this is a very easy solution. It's not taxable, and it allows them to access your equity quickly. So those are all the fun things. Those are all the wants. And obviously, in addition to wants, we have needs, and they need solutions when it comes to traditional retirement planning, because traditionally, most people believe that they'd be having their mortgage paid off before retirement. But today, 51% of Canadians are carrying debt into retirement. And ultimately, the reality is that most retirement savings are lasting on average less than 10 years now. And another reason for the increase in reverse mortgages is that historically, financial planning was based on a 10-year life expectancy in retirement. So not helping matters is that government changes to mortgage rules have had a huge impact on seniors' ability to access financing, because there is no such thing except equity lending at this time, which comes at severely high rates, with the exception of the reverse mortgage, which is still below the rate of inflation at this time. Another aspect is that 50% of marriages are ending in divorce. And that has a huge impact on our ability to retire, and it impacts our living scenario. So anybody who's going through a divorce has to take a look at where they're living, where they're going, and how they're going to get there, and what type of mortgage they're going to qualify for. So we touched a little bit on this on a segment that we did on divorces, and we have spent a lot of time trying to educate lawyers as well on this option, because what you know is directly related to the options that you'll get access to.
Welcome back. Separating from a partner is stressful for most people, to say the least, and the pain of ending a relationship gets even more complicated if you own a home with your ex. So how do you move forward financially if you're tied to a mortgage with a former partner? Expert Angela Calla joins us now with some advice. Angela, thank you for joining us.
Hi, welcome.
Obviously, a huge topic for so many people, with a lot of couples moving in before they're married, becoming common law, and then, of course, marrying and getting divorced. So, I mean, what's your first piece of advice to somebody watching who may be going through the situation right now?
The first piece of advice is to reduce the stress of an already complicated scenario. It's really important to consult an independent mortgage expert, because doing so will protect your credit and it gives you unbiased advice. And the first thing that's most important to realize is what you're going to be able to afford moving forward. And there's a lot of misconceptions with what people can actually do. And so with that in mind, a lot of people are actually surprised to learn that provided they qualify, depending on the value of their home, they can actually do a spousal buyout without selling their home for up to 95% of the property's value. So when you utilize the unbiased advice of a mortgage professional, you can ensure that you get the right advice. So if staying in the home is a number one priority for you, you can see if there's debt outside the home that can be consolidated in to pay out one party, and know that all the options with all the different lenders are being reviewed unbiasedly, so you can make the best decision for your family.
Now, what would happen in the case that a court ordered the sale of a home? Can you speak to that at all? Or
well, with the court sale of a home, they would sell the home and divide the proceeds accordingly. Of course, if there's children involved, then family law would be involved. And so whenever there's an action, there's always a reaction. So if one of the spouses is paying child support and spousal support, up to 100% may be utilized in some cases, but in some cases, lenders won't accept some spousal support, or they won't accept 100% of someone's child support, depending on the profile of that independent borrower. So that's a big strategy that has to be discussed with your accountant and your lawyer. And you have to look at what is going to give you the result. So obviously, the more amicable it could be, the easier it is. But if someone is self-employed who is parting ways from the relationship, then in most cases, although there might be tax implications of them removing one of the assets, depending on where they live as well during that time period, can really impact the options that are available. So we are just very grateful that we're in a position to be able to outline all the options and have families decide
what's best for them while educating the other influencing parties that are involved in the process as well.
Absolutely. And I'm sure there's so much concern from people that come to talk to you for advice. So what's the biggest question or concern that you hear from people that are wondering what to do in this situation?
Well, they really need to learn how they can qualify. And what we're seeing right now, and one of the best products that's being utilized that people are really unfamiliar with, is if parents are coming on to co-sign for a mortgage, then what can happen and can help minimize tax implications from the parents as well and not have them have costs associated with it is they're utilizing reverse mortgages to help bridge the gap to keep families together in homes as well. So there's so many options that are out there, and utilizing an independent mortgage professional can help educate the influencing partners around you, such as the lawyers, accountants, and financial planners, and ensure that you get the right advice. Because what inspired me to write this article initially for What's On magazine was the fact that if a client is going to an institution and they're getting the wrong advice, then they could be selling their home when the best option to keep the family together and keep things as stable for the children is to stay in the home. But if that lender didn't have the product, then there's no rewind on that advice. So we're really passionate about ensuring that people know that utilizing a mortgage broker service is free, and that we're here to give unbiased advice on what the option is. And it's really important to know that that's at the snapshot of that time, because so many things can change in that journey when you're looking at separating from your partner.
Right. And there is a way forward, as you've just proven today. So
yes, there always is.
Thank you so much, Angela Calla, for your advice and for being with us this morning.
Oh, you're welcome.
So you could see with that, we get calls on this every single day where people are living in a home. You know, we just had one yesterday. The husband was living in a $2.4 million home in Burnaby. Obviously, with the house prices going as high as they are these days, qualifying for a $1 million mortgage to do a spousal buyout when you're 58 years old and earning $80,000 a year is not an option. So with that in mind, we were able to put together a reverse mortgage so the husband could keep the home, keep the children in the home, and also reduce his amount of ongoing support with the upfront. And then he was able to give the money to the wife, and the wife was able to also buy a home using a reverse mortgage, because you don't just have to take the equity out, it can actually be utilized in purchases as well. And she didn't have the income required to qualify for the purchase price that she was looking for, but having the access to the reverse mortgage allowed the ex-wife now to make a purchase that she didn't have to qualify for with traditional means, and allow the father to keep the children in the family home and be able to have a financial plan that actually fit his future and still kept things level-headed for the girls as well. Also, in that same day, we had a woman who had been self-employed. She runs a business with her husband. She wanted to buy a rental property, but she paid herself so little and always focused on paying her original mortgage down. And because she paid herself so little, she didn't have the income or the net worth within the company to be able to get a mortgage to buy a rental, because she wanted to actually, instead of having an office for her business, buy a condo that her and her husband would work out of, but in the meantime, use it for rental income to help build other income sources for themselves as well. And they both, one was 56 and one was 55. They have a clear title home in Coquitlam. They were able to access, $650,000 of that to go buy a condo, clear title. So now they're earning the $2,500 a month rental income from that, and not impacting their cash flow or having to take money out of their company to do it as well. So understanding that there's different options, and while they couldn't qualify for a traditional mortgage, even if they could have, that would have impacted their cash flow. So utilizing the resources and the products that are out there really is so helpful for your clients.
Welcome back.
So previously, seniors would have lines of credit and equity type mortgages that would have been commonly utilized. This was all prior to stress test coming out. Now that's not an option, so they're suffering. And even if the client could qualify, making a mortgage payment or even an interest-only payment is not affordable or a sustainable long-term solution. We see people trying to do this for a few years, and then they come back and end up taking the reverse mortgage because the cash flow is just everything for them and their families moving forward. So people may have some concerns regarding reverse mortgages. They have unique features, and we can address those very easily for you. The advantages, of course, if you have somebody who passes away on a title, right now the lender has the right to have the individual requalify with a traditional mortgage. With a reverse mortgage, it's spousal protection. They'll never have you requalify for a mortgage. And so it is a lifetime approval. So once that mortgage is in place, it stays in place until the home is sold. And again, with all the competition in the marketplace, now once they see that substantial equity has been earned again in the property, so reverse mortgages that were done 3 and 5 years ago, they're very happy to re-advance new funds to you based on the new equity in your home. Now, some people have been depleting their retirement savings in order to maintain their cash flow and not using their equity. So if one of your clients is talking to you about the high cost of living and they're talking about cashing out investments and, but they're not ready to move, one of the things that they're also not telling you is the tax rates that they're paying on that and how it's depleting their wealth at a rapid rate. Because tax rates on registered investments, 10% on withdrawal amounts up to $5,000. While rates for more than $5,000 is 20%. And once the withdrawal amount goes over $15,000, the tax rate jumps to 30%. And that keep in mind that RSP and RIF withdrawals are added to gross earned income. And so depending on the size, it can push someone into a higher tax bracket and result in additional taxation, and also get their OAS clawed back and not get the pharmacare and all of the other benefits that maybe they were able to accumulate. And finally, by withdrawing the investments, there's a loss of interest earned on that money in the future. So on a final note, sadly, there have been more and more instances of predatory lending. So sometimes it's people not hearing these things, but parents are going and they're getting these really high interest private loans that come with high rates and high fees, and it's taking away equity earned. And it's due to rejection from the traditional bank that they have access to walk into. And there's also instances of a lack of knowledge that places seniors into options that a reverse mortgage would have been better. Recently, we got asked to be an expert witness for a scenario where a client had taken private mortgages where a reverse mortgage would have been a better solution, but sadly that wasn't presented to the borrower at that time. So developing the reverse mortgage expertise for you as a realtor is a fantastic opportunity to help. But more importantly, I feel that as industry professionals, we have an obligation to educate ourselves so we can be advocates for Canadian seniors. So I hope that you have a ton of questions, and I'd like to get through as many of them as we possibly can, because if you have a question, I'm sure that someone else does, and we can help gain clarity on this very effective wealth building and protection strategy for you to do more business and be more of a solutions provider on many aspects of your clients' overall protection and wealth building.
Perfect. Thank you so much, Angela. It was really informative. We do have some questions coming in now. So the first one is, what is the interest rate on a reverse mortgage?
It depends on the loan to value and the property type, and it ranges from anywhere from 4 to 5.95%.
Okay. And then can a seller use a reverse mortgage to buy first, then sell later?
Yes, that's the best thing. And they even have specific products for that. So it's fully open. So this is how people who are scared of, not wanting to sell and have nowhere to go are being able to take advantage of the opportunities that are available to them instead of having to go and try to qualify for a mortgage that they may or may not need and incur unnecessary costs. And maybe what they learn is that they actually don't end up selling and they end up keeping it for rental income or passing it on to someone in the family that is, you know, better suited for it. You know, we recently had a scenario where a gentleman in Richmond, he got a reverse mortgage on his Richmond home to buy a downsized home. And then when he moved into his downsized home, he actually said, well, you know, my son has 4 kids, they're looking for a house. Why don't they just move into it? So there's all kinds of ways that you can utilize it. Or of course you could just go ahead and sell it and go from there. But I'm glad you asked. Thank you.
And then Linda's asking, can one owner who occupies the property use a reverse mortgage to buy out the second owner?
Yes, that's exactly what you would do to be able to buy them out for a divorce. And that's exactly the example that I talked about in Burnaby, where the house was worth 2.4. The wife wanted $1 million buyout. Of course, there's no way that he could qualify or make monthly payments on $1 million mortgage on his salary. And that's exactly what he did. And then she was able to go buy her home, and you know, she could buy her home then either outright, or even because she was over 55 as well, could obtain a reverse mortgage for a purchase. So that's the perfect utilization. And these types of stories are really helpful. So if you're talking to your clients about different ways that you can help them, or you're sending out newsletters on these things, the stories on how it helps the people that you serve are really the most effective.
Wonderful. And then Richard's asking, how does it work when the property value appreciates as time goes by? Would the house owner benefit from the value gained?
Absolutely. Absolutely. Whatever gain is there goes into the estate, or if they want, they could readvance funds. That's the great thing about the products today, is they understand that this is one of the fastest growing demographics. And so they're always modifying their policies, but you always own, it's just like having any other. The only difference with this mortgage is that you don't make payments. Payments go on the back end of the mortgage. So you have more cash flow to design whatever life you want. And if you have any other mortgage, it's the same thing with the reverse mortgage or a traditional mortgage. When you sell the property, the equity is all, the estates are all yours. It doesn't go anywhere else but to you.
And Deborah's asking if we can outline the repayment guidelines and when.
Can you give me some clarity on that? You repay it either when you die or you sell.
Okay.
Does that answer the question?
There was no more clarity on that one, so we're going to say yes.
Okay. And also the process is really, really easy. So you would just like email us, and then we need the client name, address, and birth date. And then right away, they could do an illustration for how much you qualify for based on that property. And you generally don't see things over 50 or 55% of the property because you're not making payments. So those payments are taken off of the equity at a later point in time, either when you sell or pass.
Okay. And then Salim is asking, are reverse mortgages through banks or are there other options?
Yeah, so there's 36 registered banks in Canada, and there are 2 major banks that are bank licenses in Canada, Schedule 1 banks that offer these, but they're not accessible. Like a customer can't walk into that bank and get them. So they could, get them through whoever's licensed to offer them. As an accredited mortgage professional. And also there's lots of other lenders that are now coming into the space, not only banks. So there's monoline lenders and private lenders and mortgage syndicates and so forth. So there's a variety of different lenders that are offering those based on the client's unique needs.
Okay. And what would be the penalty involved in breaking this kind of mortgage?
Well, you would just pay back the mortgage, and depending on how long you have it would depend on the penalty. So just like any mortgage in Canada, you can get a fully open mortgage. And if you are utilizing the reverse mortgage just to buy before you sell, they have open mortgages. So in that case, it would be open. Or you would get after year 1, 2, 3, 4, 5, the penalty goes down, just like when you have a traditional mortgage, depending on the term and the rate that you take, the penalty is based on those factors as well. So it's exactly like a regular mortgage in this case, except you're not making a payment.
Okay. And there's a question of how many mortgages or how many properties can someone get on a reverse mortgage? Is there a limit?
So it's only available for them to get a reverse mortgage on their principal residence. They're not, and whatever you do with the money that you take out is totally your business, but you can't, like as an example, take it on a rental property. It's only meant for owner occupied. However, if you have like a real estate portfolio and say you have a principal residence and a rental property, and you needed to take equity out of both of them to be able to reach your goal, they can do an inter alia mortgage, just like an inter alia mortgage can be done on any investor who's looking at utilizing their equity in their homes to build their real estate portfolio. So it's not intended on rental properties, but it's being utilized on your home equity, and you can use that to purchase rental properties or second homes or vacation homes.
Okay. And then Cynthia's asking, do you have to requalify for the lending every so often, just like a regular mortgage?
That's the best part. And just in the slide prior, that's the protection that people have, is they don't have to requalify. With a regular mortgage, if you want to access your equity, you're always having to requalify, and you're always subject to whatever new guidelines are out there. And you do not have to do that. However, if you do take a readvance and you've deferred property taxes as an example, then of course they would just pay those up to date and then put those back again in second position. But that's why the flexibility that this offers is just incredible to help people have ease moving forward in such an uncertain time.
Okay. And Wendy's asking, can a reverse mortgage be used on a prepaid 99 years leasehold property?
Yeah, so it is property specific, and their loan to value might vary, because the 55% is generally detached homes, but they do leaseholds, they do age restriction, they do properties that have assessments on them. So they're more flexible in properties. They don't do a lot of trailers, but they will do some manufactured homes. But most importantly, it has to be cement affixed to the property. And that's in terms of that actual property, but you could always use a reverse mortgage on a principal residence to buy a property like that. We just had someone who lives here in Vancouver buy a modular home in the Sunshine Coast, and their home here was worth $1 million. They wanted to buy this place on the Sunshine Coast for $275 plus GST. It was brand new. So they were going to utilize their equity to do so. So the best scenario for them was to use the reverse mortgage to purchase that outright.
Okay.
But
And then,
depending on the property, they could easily, just get a reverse mortgage on that. But if you are on the purchase end of using a reverse mortgage, you have a client who's over 55 and they want to use reverse mortgage for the purchase, then you'll definitely want to run the property by us first, so we could check that it is one of the ones and see what the loan to value will be, because it won't be 55. It could be anywhere 30, 40, just depends.
okay. And then to clarify, the reverse mortgage can only be used on your primary residence. It can't be used off of an investment property.
Correct. However, there can be an inter alia if it was required for a payout if you were going to sell your principal residence and move into another. So sometimes they have done inter alias and wrapped a principal and a rental together if you needed funds to do a buyout or in term while you did a sale. But to keep things simple, primary residence. But there's exceptions on every rule, right?
Exactly. And then Cynthia is asking, what happens if you are in a declining market?
Yeah, that's the great thing, is no matter what, they do give you a certificate that they'll never take more. You'll never owe more than what they've approved. So yeah, it's a good it's a good security in that regard.
Perfect. And then there's a very specific question. So if a couple and the husband is 55 is looking to purchase in their joint name, the wife is in the early 40s, can they be
No,
qualified?
she's too young. He's too young now. That's easy. I just had one where the husband was 55 and the wife was 54. And we had to wait until 3 months before her 55th birthday. So again, that's why the pre-approval process is so important. But yeah, 55 and 40, no go. It would just be only in the name of the 55-year-old, but it could still be a go for the 55-year-old.
Okay, so if the 55-year-old just purchases it, and what if the husband passes away? Will the wife be forced to sell the property and repay the mortgage?
Yeah, they should get independent legal advice on that aspect.
Okay.
That's a very specific scenario.
Okay. Let's see here. And what are the upfront costs of a reverse mortgage?
An appraisal, legal advice, and it's specific to your scenario, but it's again, very similar to getting any mortgage.
Okay. And Dawn's asking, are there max values, say $5 million or $10 million homes?
In terms of the homes, not as much, but it'll be the maximum that they'll lend out. You know, I haven't seen them do too much over $1 million, but you know, the lenders are flexible, there's competition, things are changing. And, you know, we like to review things on a case by case, but I wouldn't be expecting to get reverse mortgages over $1 million at this point.
Let's see. Is interest added to the principal every month and then interest charged on the larger amount in perpetuity?
So the interest is added to the mortgage. And you can get a full illustration of what's applicable for your client when they email their details, and they can choose whichever option is suited for whatever their goal or need is.
Okay, so we've
You
talked
could also change it. Like some people say, well, I've changed my mind. I don't want a reverse mortgage. I want to make payments now or whatever. So there's options out there for that too. I don't know why you would, but you know, maybe your lifestyle changes. Maybe you get a significant influx of cash and you want to maybe start the clock from day one and re-advance all of it and buy something else.
Okay. And then we've talked a lot about the upsides of reverse mortgages, but what are the downsides of having a reverse mortgage, if any?
Yeah, you know, I struggle with that because it's a very unique product, right? I mean, it's there to help those who need it. So I don't know what a downside of it is. You know, obviously the rate is a little bit higher than what a fully qualified buyer could get, but it's not suited for a fully qualified buyer. It's suited for the cases that we talked about, people that don't have enough money for retirement, people that don't earn enough money on paper to qualify for the mortgages that they want, people that are buying properties that don't fit within the criteria, people that are going through divorce and, you know, would be forced to sell, people who want to build their portfolio, but they're self-employed and they're not showing the money that they need to, if they wanted to fit within what a traditional, and I don't want to say the word traditional, but what they would know as a common bank to offer. You know, you have to think about cash flow. If, you know, we have a client who is employed and he earns $100,000 a year through his company, but when he looked at what he could do with his payroll by keeping that cash in his hand and save that for retirement, instead of making a mortgage payment and the reverse mortgage interest rate being lower than the rate of inflation, it made much more sense. We had 2 police officers that were getting divorced, and they looked at the same thing in their 60s and said, you know, I'm having a hard time qualifying on my own to keep the home. So why don't I just keep all my income that I'm getting and invest it and save it and help my kids and then, you know, and then not have a payment and use the equity in my home because I'm going to live here forever. So, I mean, every product is suited for everybody's personal lifestyle. So it's just one of the options that could be considered. It's not something that someone has to take, but it's a great solution to be considered when you look at how to build and protect your wealth accordingly.
Okay. And does 55% reverse mortgage include the current existing mortgage?
So the existing mortgage would have to be paid out. So it would be included in that total. So we had a client that was in her 70s and she's an artist, and her husband had like $180,000 mortgage with one of the major banks. They didn't have enough, they didn't feel that they had enough. And the reason why she was still working is because she was working to pay the mortgage. that she still had, and she wanted to not make that payment and be able to pay herself a little bit with all the equity she had earned, so she wouldn't have to take out and pay the taxes on, as we showed in one of the slides, on her locked in income. And so the reverse mortgage paid out that mortgage and then gave her a little bit extra to do whatever she wanted with. So of course that's included in the total amount of the 55%.
Okay. And can you choose the term period for this mortgage, or it has to be passing or selling in order to avoid any penalties?
You would choose the term that's most suited for you. So if you were going to be selling, then you would get an open one. And if you wanted to, if you were getting a draw or wanting to avoid payments, then you would get the normal 5-year that you would get with them. And then, you know, things are reviewed at that time, or lifetime approval. I mean, you can always review your options. They're always willing to work with you from what experience we have.
Okay. And if you have a reverse mortgage, can you pay off lump sums like in a regular mortgage?
Yeah, definitely. There's options that you can have. You would want to wait till it makes financial sense to do so, like in a regular mortgage, but you could.
And then what's the major difference between a reverse mortgage and a home equity line?
So with the home equity line, the interest payment is due every month. And with the reverse mortgage, you don't have any interest that's due every month because it's added to the mortgage and you're not making a payment.
Okay. And what happens if the amount of the mortgage ends up exceeding the equity in the event of downturn in values?
So some lenders will give you a guarantee that they will never take more than what the amount is that they approved.
Okay.
So that's getting specific about the certain types of lenders that are out there. And yeah, protection is key. But this, what happens if someone has more of a mortgage, any kind of mortgage, than the value of their home? It's the same. You're in the same scenario, but they do offer you protection, spousal protection, and they would never force you to sell your home.
And is there any short-term profitability of a reverse mortgage with security from the principal sale? May take time for the mortgage to find the right property to move into. I think
that sounds like the same question that we had, if you can use your current home equity to sell and get one. So the answer to that is yes. So you'd get a reverse mortgage on the principal residence that would be open, and then you'd use that to buy whatever home you're looking to buy, if that suits the needs of the borrower, and then you would pay out the reverse mortgage.
Okay. And any debt ratio qualifications needed?
No, that's why you would get a reverse mortgage, is you don't need to qualify. And that's how people, that's the number one stress and the number one reason of why people would get a reverse mortgage. There's no stress test, there's no income qualification. So, you know, if you're 58 years old and earning $80,000 a year, you cannot qualify for $1 million mortgage with traditional means. But that, in that example, how they were able to navigate divorce was get a reverse mortgage and utilize the equity in the home to pay out the spouse. So that's one of the ways that this tool is so utilized to be able to help people with their real estate navigating in these difficult times.
Sounds like there's not a lot of downsides to getting a reverse mortgage.
Yeah, I mean, in every scenario, it's been so beneficial for clients. It's just a matter of them not knowing or not really putting together that a mortgage is a mortgage is a mortgage. What you need to do is design your own life with your cash flow and what's going to benefit you. And if your goals are to, whatever your goals are, it's about learning what's out there to help you get where you want to go.
Mm-hmm. Do lenders insist that the property be insured?
Like house insured? Yes, every house has to be insured, because if it burnt down, then that would be a problem.
Okay. Let's see here. When you do, see, I'm trying to find ones that we haven't asked yet. And then just to clarify, what is the age for reverse mortgages, like the minimum age?
55.
Perfect. Yeah, it looks like we're running into like some of the same questions. Is there anything else you want to say just to wrap up, Angela?
No, we've really covered it. The process is easy to see what options are available for you for reverse mortgage. And once you learn about that, you can consider if that's the best plan for you and your family and your clients. And I'm glad that the people that are on this call took the time to learn about that, because that'll really help them navigate as we change markets and change multi-generational family planning.
Wonderful. Well, thank you so much for giving us all this information on reverse mortgages. This has been wonderful. The questions are still coming in, but we've run out of time here. Thank you so much again, Angela. Thank you everyone for attending. Like we mentioned, this has been recorded and we will give you the information in a couple of days. And on your screen is a couple of upcoming webinars that we have. And then if you have any suggestions for topics, feel free to email us and let us know what you're looking for. Thank you.
Thank you.
Have a good day, everyone.